Good day. I'm Martin Gagel with Market Radius Research. It's Friday, December 17th, and we've got CEO Glen Lynch and CFO Abhinav Singhvi of Volatus Aerospace joining us. Volatus Aerospace is an integrated drone services, technology, and manufacturing company. I met Glen and Abby when they were raising money on their go public transaction in which I participated. I was really impressed with Glen and Abby and their business plan. I found the business plan to be very well thought out and was impressed with Glen's experience in the aerospace industry. While new technology like drones does create many opportunities, it's often very important to have domain expertise, especially in highly technical industries that are heavily regulated, like aerospace. So I think they've got a good business plan and the experience to have a good chance of pulling it off. But remember, this is neither a recommendation or investment advice. We're here to learn about the company, do your due diligence, and come to your own investment conclusions. Glen and Abby, thanks for joining us. And let's tell us about Volatus.
Thanks very much for having us, Martin. It's wonderful to be here and appreciate everybody taking the time to dial in and learn a little bit about Volatus Aerospace. So I'll start out with a bit about Abby and I. Abby is our Chief Financial Officer. He's a chartered accountant out of India, spent 10 years in venture capital and tech startups before falling in love, moving to Toronto, the old story, and decided to take some time off, went back to school, did his MBA at Schulich, graduated top of his class, and we were fortunate enough to attract him to Volatus. My case, I'm pretty much an aviation veteran my entire life, about 40 years now in the aviation space and aerospace sector. I'm a trained pilot by trade, Canadian and American airline transport license, and about 8 or 9 years in aerospace manufacturing as well. Came across the drone industry. We're really a point of curiosity at the beginning, and we decided to pop the hood and really, see what the industry was all about. And what we saw was this exploding demand, basically a nascent industry kind of rocketing out of that nascent phase, being largely serviced by small businesses. We lovingly call them two guys in a truck, but the truth of the matter is some very capable two guys in a truck, but largely small business resources. There was no operation of any scale and no operation of any national or international presence, and that's where we saw as the opportunity for Volatus Aerospace. So from the beginning, the company was intended and designed to have an international presence. We did that by identifying companies that had strategic locations, complementary service capabilities, and then we consolidated them using a roll-up strategy to create what's now one of the larger businesses in our industry across Canada and the Americas. Pretty much everything that you can see on this slide are things that we're either involved in, represent, manufacture, operate, and so on. And they really touch all of the sectors of drones, from operations, equipment sales, survey mapping, surveillance, cargo, and so on. This is what we look like in terms of our presence today. We pretty much cover all of Canada, a little bit weak in the north, which I'll talk about here in a minute. All of the United States. We literally have comprehensive coverage with about 1,200 pilots spread across the Americas in general. We have an operation based out of Bogota, Colombia. We've had for about a year and a half now. A new operation in Lima, Peru, with 3 business development professionals in it. And you can see we're expanding a little bit further down south with some operations into Latin America, drone services and equipment sales. In terms of Canada's north, this summer we decided to address the opportunities that are presented in some of the more remote and underserviced communities. And we decided that the best way to approach that, particularly because there's a large number of Indigenous communities that fall into that category of being underserviced. And we decided to actually create a meaningful partnership with the Indigenous people by forming a company called Volatus Aerospace. Volatus owns 49% of that company. 51% is owned by an Indigenous partner. We fund it from a business standpoint. We actually consolidate the results by virtue of the fact that the CFO is appointed by Volatus Aerospace, and we're the financial backers for the presence. But what that company does is develop human infrastructure or drone pilots within the communities. So as we develop commercial opportunities, be that in the cargo space between the communities or actually drone services at large, we engage local pilots, so Indigenous community members, to actually perform those services, and in doing so, create a real and meaningful bond with the communities that we're serving. So we're quite proud of that activity. The fellow Jacob Taylor that operates it for us with his team are doing a fantastic job, and we're truly proud of our association.
Glenn, sorry,
yes,
can
sir.
you just go back to the map slide there for a sec?
Absolutely.
What does each red dot represent? Is that like you have an office there, or is that where you have a drone pilot, which you hire on contract sort of on a project basis, or what does a dot mean?
So those are coverage areas where we have resources. So in some cases, those are actually offices. In many cases, that's where pilots or clusters of pilots that are contracted to us are located. So I want you to imagine this. Abby oftentimes refers to it as a giant Uber model, where we've got relationships, vetted relationships with these drone operators, and they perform services on our behalf. A little bit different. We have a larger contingent of full-time staff, full-time pilots in Canada. This was just a tremendous business model that one of the companies we acquired, Connexicor, back in July, had actually developed. So they spent several years developing a vetted pilot network where we have detailed information on the pilots, the equipment, their training, and so on, and establish this network. So in some cases, like for example, if you look at Bogota, Colombia, that's an office. If you look at Lima, Peru, that's an office. If you're in, Canada, we've got a number of offices across there. We have offices in New York and Pennsylvania and down in Florida, for example. So a little bit of a mixed bag, but fundamentally it means these are areas that we are performing and capable of performing services.
Gotcha. And so in Canada, where there's like high volumes of business, there you can afford to have people as full-time, as employees, and then in other places where it's more transactional, so to speak, you just sort of the Uber model. It's like, hey, here's our short list of guys. We've got a contract next week. We send out an email and see who's available, type of thing.
So it's a little bit more filtered than that. We actually have a lot of pre-qualifications on what people's capabilities and demonstrated strengths are. They're basic. It's a graded purpose internally. The reason we have more full-time pilots in Canada is because they were multiple acquisitions where we acquired subject matter experts. So in some cases, consider them to be acqui-hires, where we picked up some qualified senior leadership. Those people become the subject matter experts for a lot of activities that we do in other parts of the country. And that's why there tends to be a higher concentration. Also, it's because that's where we started. If you had looked at this map back in May when we first spoke, you would have seen high concentration across Canada, but relatively light concentration in the United States. The other advantage to the model that we have in the US is it allows us to be somewhat flexible to evolve to the evolving technologies. So many drone services require a pilot because of the nature of the operation. All of them require it because of regulatory approvals right now.
Sorry,
As
Glenn,
time, yes,
when
sir.
you say a pilot, is that sort of a capital P pilot where they're a licensed pilot? Because like I could be a pilot, not too much time, but I don't think you'd want to hire me for your work. What do you mean? Like, is that what you mean, like a regulated pilot?
So in fact, drone operators right now, both in Canada and the United States, are considered pilots.
Okay.
But Transport Canada, for example, considers a drone pilot, which is a certificate, they consider them to be a pilot. But what we're really referring to is drone operators.
Okay.
Now, key thing that's really good here, or really important that you've brought that up, is many of the technologies are fully autonomous. So they can be controlled or the pilot can intervene, but oftentimes the pilot programs the mission, launches the drone, and the drone functions autonomously with the pilot's supervision. That's a regulatory requirement and to some degree a technological one at the time. Where the industry is headed right now, though, is towards full autonomy, where you'll have, instead of a 1-to-1 drone to pilot or drone to operator ratio, you'll have a many-to-1 ratio. And so theoretically on the operation of cargo routes down the road, you could have an operator that's actually overseeing several operations simultaneously because the drones are functioning independently. But at this moment in time, that's not where we are. You require an operator to be in control or able to take control of that drone at any point in time. And that's the same in Canada and the United States.
So eventually, you could have like a control center where you've got like a bunch of pilots managing 20 flights that are going around, and that's sort of air command, that sort of a thing. And then you'd have to have some guy on the ground who actually launches it, make sure it's fueled up and ready to go, and so forth. So try to split up the work in two ways like that.
Correct. So to give you an example, recently I was in Europe, recently as in within the last number of weeks, I was overseas. I operated 3 drones. We had operators on the ground that were actually legally the operator, but I was in control of 3 drones simultaneously. 2 of them were in Israel. One of them was north of Toronto. And it was an example of the technologies that actually exist today. The problem is the regulatory framework is a little bit more restrictive. And in a couple of slides from now, I'm going to show you an example of the technologies that are coming and how that changes some of these requirements, particularly for, let's say, security to do with infrastructure. There's a...
Sorry.
No, go ahead, please.
And just quickly on the northern, that you said that's structured as a joint venture where, what is it, 50-50 ownership, but because you have control with the CFO, you get fully consolidate those financials on your income statement?
So the ratio is 51% is owned by an Indigenous CEO, Jacob Taylor, and 49% is owned by Volatus Aerospace. So he actually has legal control over the corporation. Volatus has fiscal control. So basically we invest and the control is demonstrated through the shareholder agreement. That's how that functions.
Gotcha. Okay.
All right. Looking ahead, on some of our highlights. Financially, the company, this is what's been disclosed thus far with our go public activities. The company, from a drone perspective, is one of the larger drone companies in North America. Our first 6 months, we had revenues of about 8.4 million in the first half of the year, and we're cash flow positive. We've raised about 13.3 million over the course of the year. We did that in 2 runs, a convertible debenture round that we used for an acquisition and some working capital funding. And then subsequently, we set out to raise 7.5 million in our subscription receipt round, our concurrent round with our reverse takeover transaction. And that one upsized and oversubscribed. We shut it down at 9.2 million. So that adds up to the money that we raised this year. We've completed 9 acquisitions to date. One of the points I'm most proud of, and it's extremely important with the future of our company being able to continue with this rate of growth, is we've had 100% leadership retention. So that's a key point and a real point of pride for me. Broad geographic footprint, as we looked at a moment ago, with about 1,200 pilots across the Americas, 1,200 drone operators across the Americas. And then we have numerous digital assets, so strong e-commerce presence with platforms that serve different geographies and different sectors.
I'd like to dig into your acquisitions. Is this a good time to talk about it, or do you have a slide later on where it kind of makes more sense to dig into?
Happy to do it right now.
All right. So you've done 9 acquisitions. I'm assuming these are all relatively small, kind of like a couple guys in a truck type of acquisitions.
Yeah, the majority of them to date have been small businesses. There was one that was a little bit larger that we acquired earlier this year, but for the most part, small businesses, 2 guys in a truck. You're exactly correct. Now, in some cases, there were 5 guys in a truck, but they were basically the same idea, small businesses.
Okay, so having them stay on is kind of key. You're acquiring them you want them to operate in the region and have service the client base that their niche is in.
So you're really touching on an important point. It's probably one of the key strengths of Volatus Aerospace, and I'm proud to tell you that 2 weeks ago, Abby was actually invited to speak at Harvard, and the reason that he was invited to speak was to actually present our RTO and our M&A strategy overall. It's been very, very effective for us, and it's been refined. I like to say it's been refined over years and years of learning what not to do, right, in previous transactions over a lifetime. But the key thing is this: our strategy is to acquire a company and realize that every business has something to teach us. But no matter how small the company is, there's something that made them successful. There's a reason they were of interest. So the first thing we do is start out by stepping into the business and saying, thank you for letting Volatus join your family. And then, we proceed to basically go hands off for a period of time, other than asking their CEO what his 5 biggest problems are, or her 5 biggest problems. And then literally they invite us to take over those challenges. I'll be honest with you, through the due diligence process, we pretty much know the answer to those questions before we ask it. But it's much easier when they invite us to come in and take over issues such as financial reporting, treasury management, regulatory compliance, and most importantly, we bring in an army of salespeople to help them develop what they've got. In that process, we tend to learn a lot about them. And just by natural interaction with the rest of the team, they start to learn more about Volatus. So the integration of those businesses becomes much easier over time. They literally become a professional family over time that start to respect one another's capabilities. Everybody has a vested interest in the performance of the overall company. And that's basically how it works. So, the fellows that are running, in actual fact, guys and gals that are running these companies, they're more like partners than anything. And they're a bunch of particularly bright and well-educated, largely millennials, although there's a couple of us with some gray hair. But for the most part, the companies that we've acquired have been full of, talented and well-educated folks.
And the synergies that both sides get out of these acquisitions, they get to leverage your sales and distribution. So they get better utilized with more business coming in through the door. You get some regional presence and maybe some particular industry expertise if some guys got expertise in agricultural or infrastructure assessment. Are those the synergies that come through?
Exactly. So synergies, by the way, synergies is not something we factor into the evaluation of a company. That's kind of the fringe benefits that come. But the synergies that are really there are operational synergies where you've added talent, as you've indicated, but also Volatus has one of the largest sales and marketing group. We have in-house communications. We have a chief storyteller actually that starts with us on the beginning of January. And we have an army of salespeople, all with complementary expertise and depth in the remotely piloted aircraft area. And those are some of the bigger things that are brought in. And of course, we always maintain positive financial resources. So we have the ability to help the company scale. And finally, because we have things like dealerships or products that we own ourselves, it immediately allows us to introduce new channels of business into each one of the companies. We expand the market for the existing group and actually provide the company that we've acquired with additional opportunities in terms of, let's say, equipment sales. So now all of a sudden they've got dealership potentials where some of their customers may be wanting to set up their own drone program, and we can actually, or the company can actually help them now. They have the dealerships. We have regulatory compliance experts, both in Canada and the United States, and those services we sell either as individually as consulting services or bundled as part of the solutions that we would use with law enforcement or, engineering companies that choose to do their own services, as opposed to have a company like Volatus or other drone service provider perform the work for them.
All right. And just, I don't want to get too hung up on the acquisitions, although it's obviously very important to the story. What is, of these 2 or 5 guys in a truck or a couple of trucks, what is the typical value of these acquisitions? And is it at all, since they're sticking with the company, are you able to do it in all stock, or is it sort of a stock cash transaction? How is that?
So internally, I'm going to let Abby comment on this because he's actually well practiced after his demonstration at Harvard, which he performed brilliantly. Proud moment for our company. But the first thing I'd say is in Volatus, we have 2 different teams. Our business development team stands on its own. That operates under our chief operating officer, Rob Walker, out of Winnipeg. But our M&A team is headed up by our senior vice president on the executive vice president on the contract side. Luke Massey is his name. And Abhinav, our CFO, on the financial side. So Abhi, do you want to talk a little bit about how we value them?
Sure, no problem. So I'll start with the exact methodology, Martin. What we do is we calculate the valuation based on, most important is the fundamental valuation, with discounted cash flow, and it's basically future backward approach. And I always have I would say, relative valuation ready based on the market precedents and the comparable companies, if we have those data points, and we compare and see if the discounted cash flows, it makes sense or not, and it's in the broad range. Once we have that valuation finalized, the rule of thumb we follow is 1/3 cash, 1/3 equity, and 1/3 in earnout. We always find that most of the acquisitions we have done or will do is there's always a gap between the future and the past performance. The seller always wants the maximum for the future, and the buyer always want to pay minimum for the future. So what we have done is we bridge the gap by adding most of the future in an earnout. And once we do that, we put all the man force behind the earnout, so that we make sure that the seller, the founder who's part of Volatus now, they actually earns that earnout. Till date, all of the earnouts have been actually achieved by the target companies we have acquired. And if we see any of the earnout being missed out, we make sure we have a weekly reporting system in place, and we call it business unit reporting. Every week, the leaders get those reports. So every week, management and the leaders know what's exactly happening in that business unit. So we don't have to wait for a month or a quarter to end to know where exactly they stand in their financial performance. We do it on a weekly basis. It's basically well in advance. We take the decision so that we make sure that not only Volatus as a whole is growing, but also the business unit and the stakes of the founders, the earnout is actually being achieved by those founders.
All right, that's great. That makes a whole lot of sense. Thanks, guys.
All right, one last comment I would add to that is, when one of our takeover companies has actually got an earnout provision, we throw everything we have behind the company to help them achieve that. Because at the end of the day, we both benefit, right? If they achieve their growth targets, everybody wins. And it's a big priority for the company, which means immediately upon acquisition, they feel support. Because it's not a, well, let's see if they can do it. It's a, let's help them do it. That's really what the objective is.
And just roughly, is it like broadly like 5 times EBITDA or 3 times EBITDA or 10 times EBITDA or revenue multiple, like roughly what you acquire folks for?
So I would say, let Abhi add to this if he chooses, but basically it's really dependent on the individual businesses. As he mentions, we maintain good visibility on precedent transactions, but in some cases you've got strategic value in a company because of a customer base that they have. You can have intellectual property that skews the numbers. And in some cases, it could be simply based off of an EBITDA multiple or an EV rev type multiple. So Abhi, do you want to add anything to that?
Yeah. So Martin, historically in drone industry, most of the acquisitions are larger acquisitions, and their EV to rev multiple has been between 0.5x to 1.5x. And so we try to stick within that range because we don't want to be the disruptor when it comes to M&A and overpaying our companies. And when you look at our financials, after 9 acquisitions, the goodwill on my balance sheet is 583,000 only. We are very frugal when it comes to paying. We never overpay because we understand that it's basically the shareholders' money. So we are very careful about spending those money and creating value. So every acquisition has an economic value add calculation. So we always take the simple decision: should we buy it or should we build it? Which is more efficient and which is more effective? And based on that, we always decide what multiple or what range we should go.
Perfect. Thanks a lot.
So the numbers that we're looking at here in front of us are really the market size. And of course, we select a common data source. As always for us, it's markets and markets. So our original numbers that we put out in the spring were based on their 2019 report. They put out an updated report this year, so they're 2021. So you can see it's about a 58.4, this is in US dollars, $58.4 billion total available market. Our target's about 15 billion of that, predominantly in the Americas and Western Europe. Some key things there. There's a very healthy growth in the industry overall, particularly in the area that we're performing most of the time, about 26%. But if we look at the combined annual growth rate of the overall industry, it's about 16% average. Canada is significantly overperforming or outperforming the rest of the industry at about 25%. On top of the total available markets, there's another $34 billion, which directly pertains to long-range, high-endurance, fixed-wing aircraft, like the one that you saw on our opening slide. That's an intellectual property that Volatus actually owns. So that's not reflected, or that's in addition to the 58 billion that's shown here. Just give you an idea of the size. It's a fast-moving train, and it's sizable to start with. Our business has 4 verticals. So our drone services vertical is where we generate most of our revenues, and that's in equipment sales, or as a drone service provider. Our drones as a service, basically, where we're using our drones, our pilots, and our data processing to deliver actionable intelligence, training, both for regulatory compliance, but also advanced operations, inspection procedures, those sorts of things. And then we have a specific activity in regulatory compliance and consulting. So that's obtaining special flight operating authorities or waivers, providing safety management systems, even to the extent of doing, incident investigation type activities. Then we have our technology vertical, which is really manufacturing and R&D. That's our newest area, but that includes, we've got some engineers that are working with us, and we call it manufacturing. It's actually more assembly and testing and integration than anything. But our primary focus, unlike a lot of operations with R&D, it's really not to develop clean sheet technologies, not to say that we don't do some of that, but our mission for the most part is to take late stage developed technologies, things that are virtually ready to commercialize, and commercialize them. So it can be used for integrating technologies together, overcoming some of the problems with the technologies that are ready to commercialize. Our objective is to find ways to drop, financial performance into the company as quickly as possible. We have a dedicated defense group within Volatus Aerospace. That's a team that focuses on heavy industry, government, and non-lethal military. So particularly logistics and resupply, more cargo activities than anything. And then our commercial air carrier, which we're going to talk about in a second. Now that's literally a commercial air carrier. It operates a conventional business jet, and it has licenses for unmanned cargo. Again, we'll touch on that in just a second. This is our service portfolio. So everything you see on this screen are places that we are generating revenues today. So we're either selling equipment, providing services, performing training, or doing some combination of the above in this space, including the regulatory compliance and whatnot. So again, this is where the majority of the revenue from Volatus is generated today. Everything that you can see here in one way or another fits within regulatory, within the current regulatory system somewhere in the geographic area that we serve. These are our product categories. Now, the big thing to point out here is Volatus, while we own technologies such as the one in the top right-hand corner, that's the technology that Volatus actually owns, an intellectual property. But the balance of the most important element of this slide is understanding that we're a drone agnostic company. So our objective is to identify and really understand the needs of our clients and match the solution with their needs. So our objective is really kind of a stickiness. We want to become an important part of their world and a long-term participant in whatever their drone activities are. Now, I did want to point out something else. The second top from the right, where you can see Hive. We were talking about autonomous solutions earlier. That's an example of a unit. It's a drone hive or a nesting station that actually is intended to be located in remote locations. So imagine an infrastructure up in northern Canada that doesn't have a lot of people around it, if any people. This thing is environmentally controlled inside. It has temperature control, moisture control. It has a weather station that's built in externally. It needs a data connection of some sort, and it needs a power supply of some sort. And then the drone can actually be controlled from a remote location, literally thousands of miles away. And if you program this, let's just say we're around a mining infrastructure somewhere, and the security people want to have a patrol done or a regular flight that's flown so that they can check on the integrity and the well-being of their assets. You could schedule that to happen 8 o'clock every morning or every hour or whatever the case might be. At that time, the drone wakes up autonomously. It makes sure that the weather station is not out sending any data that's outside of its capabilities. It will authorize the drone to depart. The roof opens up. The landing pad kind of extends upward. The drone takes off, goes up to 5 meters and hovers while the drone station closes, and then it'll fly its mission. It's completely able to be controlled by a pilot that's monitoring it remotely, but the drone will actually continue to do the entire mission, including coming back to the hive, signaling the hive that it's arrived. The roof opens up, the landing pad comes out, it lands with optical landing, back inside, close it, dump the data, swap the batteries, all robotically and autonomously. That's the level of autonomy that's coming. We can use this in certain locations where we can get regulatory authority to do it. But long term, this will become a more and more commonplace type activity as time goes by.
How like that's super science fiction. That's very cool. Like, how reliable is this? Like, it obviously, if you're doing it industrial scale in remote locations, it's not like, oh, it missed the landing target, we got to send Bob up there to sort of put it back in the hive. Like, it's pretty robust and reliable.
Yeah. So first of all, let's say that a drone has a wind limit. The operator actually programs that into the program. So if we have a 30 kilometer per hour wind limit on the drone, just as a hypothetical number, and the wind's at 35, it will simply signal the drone that it's beyond limits, abort the mission, send a signal to the operator to say we're not flying today. But in terms of accuracy, I'll give you an idea. When the drone takes off, it actually climbs up vertically. The takeoff isn't really hard to understand. It'll go out there and it'll fly with precision accuracy. It'll fly a route. When it comes back to hovering at that 5 meters over the top of the landing site, or the hive in this case, the landing pad itself has a QR code on it, and the drone has a downward facing camera. It's a precision landing system. So drones in general, where they're using satellite communication or satellite reference, GPS reference, are landing accuracy, let's say within a meter. The minute you move to an optical landing system, a precision landing system that can accurately control the drone and has the ability to tell the drone when it's on the ground, you're down to 2.5 centimeter type accuracy. So it's quite robust. The technology is actually there right now. It's the regulatory environment that hasn't caught up.
And I guess that's pretty consistent in the drone industry. The technology is way ahead of the regulators are just playing constant catch up to where the technology is.
That's exactly right. And you know what? In Canada, I've got to give the regulators credit. They're moving pretty quick. Never fast enough for us as an industry, but in 39 years, almost 40 years now in aviation, it's the fastest I've ever seen a regulator work. I believe it's part of the reason Canada is leading some of the world in terms of growth, because they are very progressive, very engaged with the industry, and it's going well. But a lot of it also, you asked about, robustness. Well, statistically, it gets a little bit tougher because the history isn't there, right? These technologies are fast moving and relatively new, but the technology is digital and it's quite robust.
Thanks.
So talking a little bit about our business combination transaction. So first of all, the company that's known as Partnerjet today was our RTO target. So we're going public by way of a business combination transaction, an amalgamation, and it's a strategic reverse takeover. So Partnerjet was a publicly traded company managing business jets and helicopters since about 1987. Very clean company, relatively small, but healthy balance sheet, and more importantly, a strong long-term regulatory, a record of regulatory compliance and an outstanding safety record. So by acquiring that company, or by executing a business amalgamation with that company, it did two things for us. First of all, it actually expedited our path to the public market, same as we would do if we used a capital company. But the second thing is, we recognize that they have licenses and certificates that enable cargo. So let me tell you, drones today in the main industry, it's a data industry. So we're out there, we're taking thermal images, all kinds of different sensor images, bringing data into the drone and delivering actionable intelligence products to the end users. But the minute you carry a box or a coffee or a pizza, I hate using those two as examples, but they're always in the news, right? The minute you carry a product that belongs to somebody else, you become a commercial air service. So Partnerjet, earlier this year, actually acquired a certificate for flying a drone beyond visual line of sight and amended its Canadian Transportation Agency economic licenses to enable small package delivery. So from our perspective, Partnerjet is the first, certainly if not the first, one of the first, but we believe the first commercial air carrier in Canada that's licensed for both manned and unmanned aircraft. So the primary focus, business jets are not our primary focus. They're the placeholder for the license, right? They're there because you require an aircraft to have these operating authorities. But basically, the company will be the cargo arm of Volatus Aerospace, and ultimately is being rebranded Volatus Aviation to make the connection. And it specifically operates exactly the same way that an air carrier would operate.
And that plane we see in the background, that is the aviation asset, the plane that Partnerjet and soon to be Volatus owns?
So Volatus has operated aircraft like that one in the past. The one that we have today, it's a different manufacturer. So that's a Bombardier Challenger in the past. It's what I've flown for a big chunk of my life. But the aircraft that we actually own is a high performance Citation 10. It's basically a very fast 8-passenger jet that lives out on the road, basically doing business jet charters. But like I said, it's a key asset in that it's kind of bricks and mortar. It gives us the credibility on one side, but more importantly, it preserves the licenses that will allow us to operate larger unmanned aircraft as time go by. There's some pretty interesting aircraft under development. There's in the United States a 19,000-pound cargo airplane that's unmanned. It's powered by 2 Pratt & Whitney Canada turbofan engines, and it's expected to start delivery as a certified unmanned aircraft in 2025. As a matter of fact, General Dynamics will probably lead the pack in certifying unmanned aircraft under what they call Part 23 or certified aircraft rules in the United States. That will likely happen early in 2022. And this aircraft, some of the freighters will follow after that, more in the 2024, 2025 timeframe. And Partnerjet is very well positioned for that.
So the Citation 10 you have, that's an operating business. It's not sexy, it's not high growth or anything, but it's a cash flow, self-sustaining business from which you get to take their licenses and then expand that into new and other growth opportunities.
You have that exactly.
Okay.
So Abby, maybe I'll get you to talk a little bit about why invest in Volatus for the people that are going to watch us go public. And incidentally, I should have probably said, we expect to be publicly traded here within the next couple of weeks. I'm guessing somewhere between the last week of December and the first week of January. We did clear the final regulatory hurdle with we had a minority shareholder vote earlier this week. So the lawyers are currently closing the transaction. That's expected to happen today. The final documents will be filed with the Toronto Stock Exchange on Monday, and then it's an administrative process between here and there. So we've jumped all of the hurdles. And for those that are interested, we'll be trading on the Toronto Venture Exchange, and our ticker is VOL.
All right. And so this is, it's an RTO, but at the same time, you're not buying a shell company. You're buying a real company that's within the domain. There's no change of business. There's a change of kind of control, correct?
Correct.
But no change of business. And then you continue on being an aerospace company with additional services and products.
It's a scope acquisition from that perspective. And in fact, it's rebranded because our primary focus is in the unmanned space, not in the conventional aircraft space. Basically, the aircraft, I should share that the company, even before this RTO, we had acquired 46% of that company about a year and a half ago as a strategic acquisition, kind of in anticipation that we may get to a destination like this. It was an attractive acquisition during the time that the stock was somewhat depressed during COVID. So we bought a fairly large volume of that stock and then subsequently completed an RTO here in the last few days.
Right.
Abby?
Yeah, thanks, Glenn. So So Martin, 6 easy reasons which we say is why anyone should invest in Volatus. First one is we are the only vertically integrated company today. It enables Volatus to serve all the segments of the market and even in the remote most location of North America today. Second one is we are pursuing is a larger market opportunity. Our total addressable market is $15 billion, and the industry itself is growing with a CAGR of 18%. So huge potential for the industry alone. We have a strong and scalable business model. As Glenn mentioned, our pilot network is 1,200 plus contract pilots spread across the Americas. It's an Uber model where we assign the missions to the right pilot based on their experience, expertise, type of drones they own, and the rating they have. Because every job they do, they get rated, and based on the rating, they are ranked higher than others. So it enables us to serve our client quicker and faster, keep our cost low and margins higher. Fourth one is our presence. 9 acquisition has allowed us to scale across geographies and also give us access to human capital in Canada, US, and Latin America. We have a strong and experienced team. We have highly capable executive management with experience in aviation. And what we have done is we have created an agile organization structure, which enables us to take quick decisions and capture all the opportunities quite easily. And the last one is, while we are preparing for the future, our focus is on generating revenue of today. We are ready to capture any opportunity, any regulatory changes that happen in the future. But at the same time, our focus is on today's opportunity, solving today's market problem. The last line is on the teams. As I said, we have capable management, experienced team, and the most important thing is we have demonstrated an ability to execute. Execution is of prior importance. We call it as we work with the speed of Volatus years. 3 times the work gets done in half the time. So what Volatus has achieved in 2 years, if you look out in normal companies, they would take 6 to 8 years to achieve the same aspect. And we have very capable team, right from CEO to executive vice president and VP and the CTO. Rather, our CTO is known in Canada as the gimbal guy. He started one of the first gimbal companies, drone companies, and he became part of Volatus when we acquired OmniView Tech in March. With this, I think we can conclude our presentation and happy to answer any questions the audience may have.
Okay, great. Yeah, I've got a few. You're going through this reverse, I guess it's an RTO transaction. Could you, excuse me, do you have a slide on your capital structure, or at least sort of verbally tell us how many shares out after the deal and so forth, just to give people some context? How much do you guys own? Some insider data information, if possible.
For sure. So this is a cap table slide, and this is after we go public. So if you'll see in this slide is, yeah, I'll move it here. So if you'll see in this slide, Volatus insiders, basically they own 62.5% fully diluted. So it says a lot about the skin in the game the management has. And not only this, we are also governed by the TSX escrow conditions. So everyone is logged in based on as per the escrow schedule for the next 3 years. The remaining categories, approximately 24 million stocks, that would be free float. 1.35% is owned by Partnerjet, the RTO vehicle, and remaining is the 2 rounds of investment we did, where we raised $13.3 million. That's 22 million. The good thing is when we raised convertible round, the convertible debentures in March and April, most of the investors from that round have reinvested in the next round, which was the private placement to go public. And we have also done is we have hired a market maker. We have fully dedicated external IR firm and internal IR resources full time who are helping us to make the company go public easily, and so that people know and there's significant liquidity as once we go public.
Right. And what's your balance sheet gonna roughly? I don't know if you're allowed to say it at this point if you're in some kind of quiet period, but what does do you have a lot of debt? Is there how much cash on the books and anything like that you can sort of indicate?
So when we file the information circular, I'm going to quote the numbers from the circular because it's a public document.
Yeah.
So it will have approximately 10 million total cash, and this is gross of all the banking fees will be paid later on. So it will get deducted from the cash balance we'll have. The total assets would be approximately 24 million. and out of which a long-term debt would be $2 million. And that's the debt we are acquiring from the Partnerjet. It's the debt is on the Citation 10 aircraft, which has a market value of $3.3 million US. So the net assets of that companies are positive as well.
Right. And M&A is a big part of your strategy here. Like we've been chatting over the last few weeks and months since we first met back in the summer or whenever it was. You actually haven't been able to execute on your M&A strategy while you're in this transform. So those 9 acquisitions were what, in the first half of the year. So do you have, like, once you go public, we should be seeing a bunch of news flow, hopefully, on some new acquisitions coming up?
If Abby was anywhere close to me right now, Martin, he'd be kicking me under the table. But so cautious of forward-looking statements. Let's just say that we've continued to work very hard in that period. Those 10 acquisitions happened over a 12-month period.
Okay.
And we haven't stopped working, notwithstanding the fact that we have been in a quiet period, which has impaired our ability to execute on a lot of the things that we've worked so hard on, for sure. So we're quite excited about next year. And I can tell you, we had an opportunity on Tuesday to enjoy our minority shareholder vote only for a matter of a few minutes. Sorry about the sunlight pouring in here. I'm happy for the sunlight, but sorry for the timing. But I can tell you, we've got some heavy lifting to do right now over the next few weeks, because I'm happy to say that none of our files, I'll say none of our active files were actually compromised, but rather just postponed. So we got a lot of work ahead of us, and it's exciting times. Let's just say that. Gotcha.
So just on that theme, so in 2022, the plan is to close on, obviously nothing's guaranteed, but to close on a bunch of M&A, and you've been working in the background on stuff, but obviously nothing's guaranteed, but that's hopefully the plan for the next little while. What other sorts, and I guess on the M&A, is it like going to be the Americas, North and South America? Is there opportunities at this point for the rest of the world, Europe or Africa or wherever there? Sorry, so just like, yeah, maybe flesh out the focus of your M&A strategy in 2022.
The drone world, the opportunities are consistent globally. I mean,
yeah.
The main reason for raising capital is to allow us to scale and ramp up our existing businesses. But long-term, Volatus, actually, remember, we're focused in 2 areas: organic growth, but also M&A activities. It's our intention to continue to strive to be the leader as an industry consolidator. There's lots of room for continued growth in the Americas right now. And we're fairly active in international markets in terms of understanding who the players are, building relationships with them at this phase. So long term, we're not restricted into North America, and we definitely have an interest in other Americas and in other markets. Realistically, when you're in a high growth mode, being in the Americas is kind of interesting in that everything's within 3 or 4 time zones. So that's certainly helpful, but we're already doing work in places like Africa. We're bidding on contracts that are there. We've bid on a number of international contracts, and we definitely have interest beyond North America.
And we've discussed this before, but your idea, you're going to be let's say, an America's platform right now, and hopefully soon a global platform, and that'll be your customer base. So if you're working with a multinational oil and gas, mining or whatever, they hopefully get to the point where, like, hey, we need drone services, whether it's in Africa or Chile or northern Canada at a mine site, we know who to call, and they're sort of our global Uber of drone services.
So exactly what you're discussing is happening in the Americas now. So for example, on things like, let's just say railway activities, we're no longer just bidding on local contracts, but rather national ones. If we look towards insurance, for example, right now, small drone operators can launch a hurricane goes through or a hailstorm, and you can launch a drone to assess the damage and, in fact, provide some quite sophisticated information. Our efforts right now are more on providing that exact kind of solution with a one telephone call anywhere in the Americas solution, where you can make a phone call and they can say, we've got a disaster that happened in XYZ or Upper Gum Rubber Boot. And, 2 hours later, we have a drone in the air over the area. But ultimately, we've got that in the mining communities right now. We have customers that we work with in North and South America that are also located in places like Australia or Africa. So most definitely, it becomes a global service offering at that point.
All right. Good stuff. We have a question here. When do you forecast that beyond visual line of sight will get regulatory approval, and when will Volatus be ready for it?
So two very good questions. The first one is beyond visual line of sight, you can get special authority to do that now. For example, and I'll talk about that in the second half of the question. Canada was supposed to implement low risk or regulations that enabled low risk beyond visual line of sight. They call it BVLOS or BVLOS. That was supposed to happen in June. And in July, we discovered it was being postponed until probably Q1 of this year coming up. So it's a little bit of a moving target, but they are getting very close, particularly in Canada. We're getting very close. So I would say, we're now measuring that in much shorter periods of time. It's no longer a never plan. It's something that could easily start happening in 2022. That said, it's already happening today. So the second question was, will Volatus be ready for it? We're already ready for it. So we are conducting, and we are authorized to conduct beyond visual line of sight flights in every region across Canada. So at this moment in time, we have basically 6 locations that are approved in each regulatory region. We're using them predominantly for training. So we're actually running training courses for ourselves and others on the elements of beyond visual line of sight, preparing for the new regulations as they come, but also helping people understand how they can obtain approvals to do beyond visual line of sight right now. Like, it's possible to do a beyond visual line of sight inspection of an infrastructure unit. It's completely dependent on being able to justify the risk profile and get the regulators on board. It has to do with the capabilities of the company, the training of the pilots, the risk profile of the environment, and a number of other factors that are there. But it is possible to do it currently. We are flying beyond visual line of sight currently. So the answer to the question is we are ready for it.
Gotcha. I remember a bunch, I don't know how many years ago this was now, like 5 or 7 or what, Amazon made all sorts of splash where they said, we're going to have drones dropping things off at your house. And obviously that they were way ahead of the curve and trying to do some arm waving and so forth. Are we anywhere close to that? Are we going to be seeing Amazon or you guys sending drones to drop off my 1-hour delivery of shampoo or whatever? Is that anywhere close in the horizon?
So it's, from I'm going to answer it from the perspective of the industry, and then I'll give you Volatus perspective. The industry believes it's coming. There's an enormous amount of energy. There's a company in the United States called DroneUp that's paired with Walmart, and they're looking to do urban deliveries. They have some trial programs out right now that are extremely localized, where basically they can deliver, a consumer good somewhere really nearby. The bottom line is there's a couple of things that have to happen, really 3. One, we need the regulatory environment to change. That is coming. So that will happen in the not too distant future. I'm going to say somewhere between 1 and 3 years at the outside, maybe sooner. The second thing that it requires is some technology. And that's particularly in the area of traffic management for these unmanned vehicles or remotely piloted aircraft vehicles. Those technologies also exist. There's a number of trials going on in North America and several in Canada where they're actually proving those technologies to the regulators. And then the last thing is social acceptance, right? It's making sure that we don't have everybody upset because they got 500 drones flying down the street when the time comes. And from our perspective, Volatus is watching that area very, very closely. There are some companies that are focused on it, so we pay very close attention. The problem is most of the companies that are focusing on that area are largely pre-revenue, both in Canada and the United States, are very, very small revenues. Whereas Volatus is really focused on more of the things that we can actually do in the current regulatory environment, both to generate sustainable revenue as a sustainable business, but also to make sure that when the opportunities come in the future, we have the ability to scale rapidly because we have both the financial resources and also the human infrastructure to be able to do it. We are, I think, one of the companies that's best positioned to be able to scale on any large opportunity across the Americas currently. But the way I like to say that is when it comes to urban delivery, we call it drone cargo. That's not urban. That's ship to shore, shore to ship, out to oil platforms, remote communities, those sorts of things. But urban delivery, we're watching it. And as soon as somebody cracks the door open and we can see the light of day, if we discover that it is a big opportunity, we're going to be the fastest follower on planet Earth. We'll knock the door off the hinges. That's what our thought is. But at this moment in time, it's largely a watch and see. We don't see it as being a primary focus in the immediate future.
And part of your plan is you can basically build up your drone credibility in the market in doing all sorts of other things. And when that window does open, you're like, hey, we've already flown whatever, so many thousands or millions of hours and miles and so forth. So we kind of know what we're doing as opposed to just waiting for the technology and the regulatory environment to evolve where it opens up the door.
You know, here's something that I always find really interesting. As a CEO, I get the distinct pleasure and privilege of taking credit for a ton of stuff I didn't do, right? And in this particular case, I believe Volatus is already there. By virtue of the people that we've been fortunate enough to gain through our acquisition strategy, we employ some of the best and the brightest in the industry. So I think a lot of our brand recognition right now is coming from the strength of those people. We have the ability, if there's something that can be done with a drone today, we pretty much have somebody in the company that can help us get it done. So, but you're absolutely right. As people get to know us more and more, we become the go-to, or the objective is to be the go-to people. And the way we like to talk about it internally is, instead of telling people we're the leader, we want to demonstrate who we are and have others tell people we're the leader. That's literally where we're focused right now. But I have to be honest with you, if I put humility aside, I think we're there now. We've got some tremendous talent inside of Volatus Aerospace, and talent I'm very fortunate to work with.
And if you don't have, let's say, some new obstacle avoidance technology comes out to make urban or whatever market opportunity there, you're not married to your own technology. You'll just buy, if DJI or whoever or Boeing has some good technology, you'll just license that or buy that and use sort of best in class technologies to get the job done, right?
Whatever gets us to the market the fastest. We have complete technological solutions right now based on what's available today. We can operate drones remotely. I can run a drone on an insurance inspection and actually email you the link so you can watch the inspection live. We have the ability to control the assets remotely. We have the ability to stream data live. We have tremendous capabilities there, but a lot of that technology are technologies that we've identified and integrated into what I'll call an engineered solution. But fundamentally, we're not married to anything other than successful missions for our customers and revenue generation for our company and value for our shareholders. So that's our single biggest focus. So we are completely agnostic. Half of the reason that we invest in technology is because we come across something that's ready to be commercialized, and we think we can get it out to the market quickly, and we think it's right there. But we're also tracking things. You brought up detect and avoidance technologies. We're involved in a partnership in North America right now where we're doing some work with one of the industry leaders here. We're closely tracking a technology right now that's in Israel. Israel is a tremendous place right now for a lot of technologies in the drone industry. A lot of investment in the high-tech space, very small community, a lot of the dollars getting into some really capable and talented hands. It's a real brain trust there. But you're right, we're agnostic to the technologies. Whatever we can get commercialized most quickly to meet the demands of our customers is where we go.
All right. Well, I'm an excited shareholder. I won't hide my bias here. I'll make a transparency on that. So I'm super excited about you guys trading and watching you guys roll out the business plan. I think we've done a pretty thorough job here covering the key points. Anything you guys want to highlight before we wrap this up?
No, I would say we appreciate people following us. We're doing our best to communicate actively with our shareholders. For those that are currently shareholders with Volatus, our gratitude for your support. We take your investment very seriously. And I want to tell you, our intention as a company is to make sure that we communicate as regularly and as thoroughly as we can with our shareholders, recognizing that they are in fact shareholders and not just investors in the company. It's going to be an exciting time to follow the drone industry. We have a couple of companies that are up and coming in the drone industry that we're quite proud to be associated with. And it's definitely a sector that I recommend people keep an eye on.
Right, Abby, right, Glenn, thank you very much for taking the time to talk with us. And hopefully I'd love to get you back in a few months after you've been trading, and hopefully you've got some good news releases out in the world, and we can see how things are progressing.
Thanks very much. And thank you for having us. Happy holidays.
Happy holidays, all the best, and all the best into the new year. Cheers.
Thanks, Martin. Bye.